Hi, everyone. Welcome to today's webinar, What's Overcomplicating Your Home Equity Lending and How to Fix It. I'm Betsy, Marketing Director at Coviance, and I will be your moderator today. The session will run about 30 minutes. We will not have time for Q&A at the end, but you can still submit questions at any time using the Q&A box at the bottom of your Zoom panel, and we'll get back to you after today's session. We've got some great speakers today who will be sharing home equity standards and strategies to help you rethink your approach. Joining us is Don Arkell, owner of CU Lending Advice, calling in from Denver, Colorado. Alan Jingst, Chief Revenue Officer at Coviance, joining from Des Moines, Iowa. And Grant Abbot, VP of Lending and Administration at Champions First Credit Union, located in Tallahassee, Florida. So without further ado, let's get started. Alan, I will turn it over to you.
Yeah, thanks, Betsy. Don, Grant, and I were just commiserating before the webinar started about upcoming fall college football, winding down summer. It's the Iowa State Fair here in good old Des Moines. So we had people in from out of town. The experiences you can have at the Iowa State Fair, just to give a little preview for those who may not be familiar. For people that were new in town, we went from one side of the fair street, their first time milking a cow, to across the street having a gourmet lobster roll with caviar and stuff on top. So that's the Iowa State Fair. It's everything in a nutshell, a little bit crazy. But today we're not here to talk about the Iowa State Fair. We're here to talk about home equity lending. And the question we're posing out there is, what is over complicating home equity lending? And I guess the good news is there's a lot of people registered for this, so you're all in it together. We're all in it together. There's a lot of things over complicating home equity. The short term answer is it's you, it's us, it's all of us. It's the way we're approaching things. So we're going to kind of break this down into three sections today for the webinar. Don's going to kick things off talking about process efficiency. You'll see we have this stacked in a pyramid, and it really is intentional that in order to build a successful home equity program, you have to take things in priority and in order. And the foundation of any good home equity lending program is the process efficiency. If you automate a bad process, you're going to have a bad outcome. If you just go and exchange the top layer of technology, you're going to have the problem that plagues the industry where everyone's favorite LOS is their next LOS, right? I mean, it's changing that top layer of technology and expecting different results. And so I'll talk a little bit about the borrower experience in the middle, and Grant will give some overall perspective of technology and adopting some of the things Coviance does here as he and his credit union went through the journey of process efficiency, borrower experience, and then adopting the technology. So I'll turn it over to Don to talk about process efficiency and explain what he does here at CU Lending Advice.
Great. Thanks, Alan. For those of you I have not met, and there's a lot of our clients on the call, my name is Don Arkell. I'm the owner of CU Lending Advice. And just to kind of give you a scope of what we do, I spend about 130 nights on the road working with credit unions all over the country, from 12 million in assets to 30 billion. And we work with credit unions on their sales effort, their incentive design, and anything C-suite, and a lot in the process, right? Getting down in the weeds. We describe it as getting the rat through the snake, right? Taking a look at your processes, picking them apart, and trying to make them a little bit more modern. With that, that's what we do. We spend a lot of time doing it. Moving to the next slide, obviously there's a huge opportunity with home equity today. There's over $34 trillion in untapped equity. We're getting a lot of calls, and over the past 18 months, I would say a third of our jobs have been, hey, come in and fix our home equity process. It's broken, right? We're averaging 55 days from application to close on a junior lien, on a HELOC. And that's not uncommon, right? Now, some of our clients are moving much faster than that. But there's a huge opportunity, folks. It's a great opportunity to help relieve them of their consumer debt, to consolidate debt. We would much rather consolidate debt on a HELOC. But what we find in our practice and in going through the flow at credit unions is that there's some common challenges. There's some common problems that credit unions are facing. So here's some just general standards that we use when we make our recommendations to change. And the problems we see are common among credit unions. One thing that I think credit unions get wrong about it, or that are frustrated, is that this is really a fancy consumer loan, right? And I think we need to look at it that way. We recently did a survey of our clients, and their average HELOC was under $100,000. And I think it can be frustrating sometimes for the staff when we're doing a $75,000 HELOC loan and we're running the member through the paces, right? Going in depth on things that don't have anything to do with risk and taking forever to get an answer back to them. Where we can do a $75,000 truck loan, give them an answer in 20 minutes and fund the loan the same day. There's a disconnect, right? There's also a disconnect with your membership. It's not just your employees that are frustrated with this, it's a disconnect with your membership. One of the things we like to emphasize is that we're selling an answer. We're not selling fulfillment, right? And when a member is applying for a HELOC loan, they need to know, am I good to go? And they should know that within the call, in my opinion. Yeah, you're good to go, assuming that everything checks out. But what happens so often at credit unions is we run this through a mortgage process, right? Where we gather all the documentation up front. We run them through this big deal. Just because the house is involved, we turn this into a mini first mortgage. And in reality, it isn't, right? We're selling answers, and that's what your members want. They want to know, am I good to go? Am I good to make this addition to my basement? Am I good to fund my next vacation or do whatever? We need to get answers back to them quickly. And it's our process, right? It's our process that's slowing this down. And Alan mentioned it earlier, and so often we get asked, Don, what's the software? What software do we need? Well, software isn't most of the issue, right? Now, software can help you, and Coviance is a solution that can help you with it, but software is not a solution. And to Alan's point, if you just get new software without fixing your processes, what you've done is taken 10 pounds of crap and put it in a 5-pound bag, right? It's not going to work. We've got to be able to fix the base layer of our process. Do we want home equity loans to begin with? What kind of experience are we looking for our members without taking untoward risk, right? The other thing too is when it comes to like documentation, the documentation should be commensurate with the risk. We can do to this point, we can do a $50,000 unsecured loan for our membership with stated income. Now, we do recommend, for instance, that you always verify income when it comes to the house. But, when we're running members through these paces of saying, I need 2 years of your tax returns that nobody at the credit union can read in order for us to do this HELOC, that doesn't make any sense, right? When we're asking for documentation like a first mortgage process of, hey, what was this inquiry about? All of this stuff that we're taking first mortgage processes and sticking them on top of what is essentially a fancy consumer loan. We're not mitigating risk. All we're doing is frustrating members and increasing the time it takes to get that yes to a member, right? When we prioritize speed and efficiency in our recommendations when we work with credit unions, again, every time we pick up and touch this file, the credit union is losing money. By these loans self-select, right, from a borrower risk profile. These borrowers are homeowners, right? And by building processes around 90% of the loans that come in, it frees you up time for those 10% of exceptions, right? We don't need to touch these loans 35 times, run them through 5 underwriting cycles before we say yes to the member and fund the loan. We're overcomplicating the process for sure. And this comes to structure. Now, I'm not sure how it sits in your credit union. Does HELOC live in the consumer side or the mortgage side? And I can make cases for either one, right? What I would say for sure is that if it does live in the mortgage side of your house, you need to have a consumer mindset, right? You need to have that upfront underwrite. You don't need to beat these files to death, right? You need to use the right settlement services when ordering. And if it lives on your consumer side, right, there's a lot of good practice that we can take from consumer lending and apply to this process. Just because it has a house associated with it does not mean it's a mini first mortgage, right? We're underwriting it like a first mortgage and it isn't, right? You have enough information to give an answer to yes. The risk in HELOC, right? The risk in this process is in how you perfect your lien. It is not in the underwriting, right? When we talk about underwriting, what do we mean? We're evaluating risk, right? Is there equity in the home? Does the member have good credit? That answer is yes, right? If it's yes, then we move on. Where the devil is in the processing, curing any title problems, right? Making sure that we're ordering the right settlement services, making sure we're putting and structuring that loan. If it's over 90%, do we want to have an additional insurance product? The risk is in the process side of it. It's not in the underwriting. Manual touch points are slowing decisions for sure, right? We're beating these loans to death, right? These should mimic your members applying for an $85,000 Suburban loan. That's what it should look like. We should get answers back to our members quickly and move forward. Again, we're losing a lot of borrowers to our speed-focused competitors, and that's absolutely true. I can click online and get an answer back on a HELOC from a multitude of fintechs while I'm standing in your credit union, right? And requiring members to cough up all of these documentation prior to giving them a yes is not going to work moving forward in 2025 and beyond.
Yeah, and Don, I think to summarize it from kind of Coviance perspective, one of the things I'm most excited about is our partnership and working together and taking a lot of those recommended guidelines, feedback from our customers, feedback from you and your customers, consolidating that into a pre-built workflow underwriting process engine that's ready to deploy at scale and be fully automated. Obviously, though, like we think about this as fastest, faster, and fast, right? So we want to underwrite everything in the fastest way. You use 90%. Obviously, we know when we're talking about this at a high level, there's going to be some state-specific requirements, things like that, right? So, you know, the workflow and things have to be adaptive too, right? So, I mean, I know if we were doing Q&A, I'm sure we would have questions coming in from Texas or other parts saying, hey, wait a minute, we can't do it in 3 days in certain areas and restrictions. So obviously we know some of these things come with an asterisk, but I thought it was interesting. You think 90% is the number that should flow through a pretty straightforward, simple process.
Yeah, based on our experience and looking at it, right? I mean, W-2 employees, we're not talking about the self-employed borrower in many cases. Again, credit unions need to have the mindset of building processes around 90% of what we do rather than building processes around the 10 or let's call it 20% exceptions, right? We don't put everybody through a 20% exception process. We're doing a disservice to the 80% of the members, right? We free up time to have that available in our process. If we're have a fast track on the majority of our loans, then we're freeing up our staff to actually solve human problems.
So if you think about the outcomes of faster time to close, higher pull through, really focus on that 80 to 90%. Look at replacing the manual checkpoints with automated, repeatable processes. Think about things that are home equity specific versus taking a copy and paste of your mortgage process. We see that a lot too from our side, align on risk-based thresholds. So I'm going to talk a little bit too, as we talk about borrower experience. I'm the Chief Revenue Officer here at Coviance. I've been here for about 7 years. Had an opportunity to work with many. I want to thank our current customers who are on this call too, many of them. The interesting thing is we've been around long enough now that we love disruption. We love challenging status quo. And in a number of cases, we have become status quo. We've had customers who came on board with our technology many, many years ago when we didn't have a lot of this same automation and new approach available. So for many people on this call, this may be a first time in a while seeing some of the new enhancements that we have. So just because you're working with Coviance doesn't necessarily mean that you're taking that same 90% approach. And, Don, you talked about at the end, fintechs. And I want to just talk for a minute. You said, I love the way you said it. I can walk into your branch, submit an application, and have an offer from a competing fintech before I get done with the teller line in a lot of cases. And that's a lot of truth in that. And so as you look at, just some of the themes that I'm seeing from competing fintechs, it's about speed, it's about efficiency, and it's about experience. And I think the important thing is members want fast service, not free. And a lot of us as credit unions are still competing on trying to discount an interest rate, give away products for free, pay closing costs. Even on HELOCs, I see a lot of credit unions that are paying closing costs on HELOCs There's no like real incentive for any kind of a forced draw or draw. And so they're paying to originate these loans that sit there unutilized or barely utilized in many cases. And so I think if we look at what some of these fintechs are doing right and learn from them, what we'll see is, Figure is a great example. Figure advertises home equity fast. They have a great upfront digital experience. You'll see their online application kind of represented in the top two pictures. Coviance, if you look at us on the bottom, we have a similar simple. We even have our online application end in an offer, so that in about 5 screens, your borrower is getting to an offer that's based. We're not asking them. And I think that's a big thing, right? Don, you alluded to this too. It's very frustrating when I go to my financial institution and I fill out a typical mortgage application, which is asking me things like, how much is your home worth? How much do you want to borrow? In a lot of cases, I don't know. I put something in there, and then now you've got to turn around and resell the loan to me. You think about that from both viewpoints. Don talked about it from a processing point, from the credit union perspective, to say, hey, wait a minute, we're overcomplicating this. You think about it from a borrower perspective, it's like, I just answered this, or why are you? I don't know how much my home's worth. You should know that, right? So looking at technology like Figure, like Coviance, like others out there that are powering these solutions, we're able within about 5 or 6 screens, Grant's going to talk about that a little bit more here in a minute, to get to an offer that's built on technology, that's built on us bringing that, as opposed to, this is a screenshot from an online application from a credit union. And again, this to me is sometimes where if you get technology ahead of experience and process, you can end up in a situation that looks like this, where literally when you click on the home equity application, it says the first option is select a branch. Okay, maybe that's relevant, maybe not. But then literally the next question before anything else is select a loan purpose. And the loan purpose is really just loan offerings. And if you just take a second to look through that, it's literally, as a borrower, how am I supposed to know, A, what's the difference between an express mortgage, home equity line of credit, and B, what's the difference between 5-year, 7-year, 10-year, 12-year, 15-year? What does that mean for my rate? What does that mean for my term? So literally you're asking me to select something. Drop off is high in a lot of these cases because borrowers don't want to go through this process. So you look at Figure, right? And I kind of revealed it for those that saw, but a lot of times I like to ask here, you look at Figure, what they're doing right now is they're charging the borrower, between points and cost, it's about $4,000. And a lot of times when I have that conversation with credit unions, they're like, whoa, nobody would ever pay that. And I'm just actually going to do a little improv here and hop out of this presentation. You guys can still see my screen, right? Betsy?
Yes.
Yep, we can.
Okay, so in reality, here's their, and you can go right out to trustpilot.com, and I would encourage everybody to do this. And if you just look through it, they've actually gone up from 4.7 to 4.8. And just look at the themes of what people are saying. 5 stars and over, it's easy and it's fast. And borrowers are not saying anything about interest rate, cost. It's you help me consolidate my debt, and you can just literally go through and read quick, easy, friendly, easy, quick, and just go through that process, right? And so the themes coming from these fintechs aren't about lower rates or being competitive in the market. They're quickly becoming the fastest lender in home equity that's non-bank, because they are going direct to your members and offering them what your members want, which is fast and easy, not cheap and complicated. So if you think about kind of those 4 steps, right? What a good borrower experience should look like is an online application that leads to an offer where I can submit an offer. Once that offer is submitted, it goes into an automated process that allows quick and easy tasks that tell me what to do. And disclosures go out automatically. It's a very streamlined. So from a borrower experience standpoint, I apply, and then very quickly I'm getting an email. It's telling me the very specific things you need me to do. I wish I could pull up the email and show you all, but this is built, and I think Grant will talk a little bit about an experience he had with home equity kind of coming into this space. I had a similar one. I started 7 years ago. It was a couple years into it. I actually needed a home equity, and I reached out to a credit union. And the response I got back from the loan officer was an email And literally, it asked me to do 13 things. It asked me 13 questions. What's the loan purpose? Are you married? What's your income? What they asked me what my investments, were outside of my income. And it was 14 questions with no way to provide any documentation or answer. It was just an email saying, hey, I'm going to throw 14 questions out there. Let me know how I can be helpful. And I brought that back to our team and like, guys, we got to help. We got to help credit unions do better. And so we created the borrower task, which allow you to automate anyway. Getting beyond that, the important thing is it goes from online application to quick, easy tasks that are easy for your borrower to complete. Boom, 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 they're done. It gets to then the lender to review and close, and then automates funding and disbursement. And that gets a very streamlined from a borrower. That's what I expect. And I think to Don, I mean, I don't remember the exact word you said, but basically you're selling outcomes, right? What was the
We're selling an answer, right?
selling an answer? There you go, right? So at the end of the day, that's what you're getting to, right? At the end, that debt consolidation, that loan, whatever they're using that money for, getting to that answer. So that's the borrower's answer. From the credit union's perspective, the answer is lower application drop off, more completed loans. And we're seeing that play out time and time again. And Grant will talk a little bit more about that here in a second. But just again, as you're thinking about checkpointing, am I the problem? Is my credit union the problem? Are we overcomplicating this? Things to think about. Borrowers want ease of use and lower rates. Excuse me. Borrowers want ease of use over lower rates. It's more important that it's fast and easy than it is cheap. That's the new generation coming in. It's the Uber Eats generation. It's I'm going to pay a premium because I don't want to leave my house. And yes, I'll pay $20 to get that $10 Happy Meal delivered to my door because my kid's screaming and I don't want to leave the house. Borrowers expect a frictionless and intelligent experience. Borrowers will pay for a better experience. We're having a lot of credit unions that we're working with as adopting this technology, allowing them to compete on experience instead of price, are readjusting disclosures and able to pass some of the closing costs on to the borrower as part of that process, making it, an inexpensive addition to their overall process. Borrowers want relief from debt. I think that's a huge thing. Don talked about it a little bit too. The fastest growing reason for home equity is debt consolidation. So differentiate on speed and experience, not on rates and free loans. That's kind of the borrower experience takeaways, gut check. Am I overcomplicating it? Am I not? Right? So I'm going to let Grant introduce himself here, champions first, talk about kind of their experience, their journey on being able to get the loan process right, kind of thinking about that borrower experience, and then adopting the technology that helped them kind of culminate that process.
Yeah. Thanks, Alan. Thanks, Don. So Grant Abbott, Vice President of Lending here with Champions First Credit Union, North Florida market. We're running right about $500 million in assets. And so we've never been a huge player in the mortgage market. We've never been a big HELOC shop. But as we started to kind of grow into our current size, we looked at it and said, all right, let's fix this. Let's look at this. Let's see what we can do. However, I'll use a personal experience that kind of jumped us off to say, hey, what do we need to do? What do we need to change? And that is in 2000, I guess it was 21, I used a fintech to finance a home that I was purchasing. I actually got from application to close on a first mortgage in 20 days. We turned around a year later, I applied for a HELOC at my credit union where I managed the process, and it took me 28 days to close the same loan. So there was a giant disconnect there. We had a pretty application, we had a great product, but it was cumbersome, and it was cumbersome for both the member and the employee here. We fast forward a little bit later, 2021, 2022, we all experienced turnover as I'm looking to train new staff and bring new staff into the process. We're trying to train them, and it takes me a month and a half to train people on a HELOC because I can't get to the next step. I have all of these roadblocks to, you're picking it up, you're talking about it a second, and then you put it down for 4 days, and you come back to it 4 days later to look at it again. And it just keeps creating these roadblocks one after another through the process. And so, I start this, then I go, all right, I need some more volunteers. And as I start, asking around the group, no one volunteers to learn to do HELOCs. Nobody wants to do them. They're all scared of them. They're scared of the process. They think they're confusing. There's way too many steps, feel like they're going to forget steps in the process. And so it was apparent that while I had already experienced the borrower side and saying, hey, that doesn't line up with what we want, for an employee experience standpoint, it might have been even worse in originating these HELOCs. So this kind of led us back to Don's initial point of rethinking what actually is a HELOC. What is that risk for us today in today's environment? Go back 15 years ago when we built the process that we were using just a couple of years ago, and a $20,000 or a $50,000 loss could have been catastrophic to a month. That was the difference between red and black on the bottom line. Not saying I want to take a $20,000 or a $50,000 loss today, but it's also not the same risk that we had before in that. So we started identifying what are the biggest inefficiencies that we are facing here at our credit union. And one of those is going to be appraisals. It's going to be valuations. Like, how quick can we actually go from hypothetical to this is actually what it's worth and what we can lend? The second was, on the condition reports, even when it was a slam dunk, there wasn't even a first on it. And we're trying to originate a HELOC for $50,000 on a home that has a tax assessed value of, $500,000. I still got to get somebody to go through, drive over there to the house, take some pictures, put it in a report, and do some of these other things. And so even with speed, it wasn't helping us out there. And then title. We haven't talked a whole lot about this yet in this process, but we were pulling full title on every transaction always. And one, it's costly. Two is it is time consuming, and it is always the last thing you're waiting on before you can close, and it's always almost in your inbox. You can check with the title agent. I'll have it to you momentarily. It just doesn't show up. So, and then finally was our application. In order to get information about the HELOC, a lot of times we had our members, going online, finding the phone number, calling us up, going through the call center. Nobody in the call center knew how to talk about a HELOC. So then they had to find the expert on this side. They talk hypotheticals back and forth. They send them an application. 4 days later, we'd get this application packet back. It wasn't filled out correctly. We jump through all of these steps to then apply and then start working through and then start talking about specifics of their loan application. What we see now in the current process, really by using the point of sale option and the way it flows through, is we don't ever talk to the borrower until we already have application in hand. We generally already have valuation run, and we are talking specifics. We're talking approvals. We're talking answers. What we were, as Don mentioned earlier, is we're not having to go through all these hypotheticals. We get an application, we're engaged with them, and we can deliver an answer, and we can keep them in the process. I think so many processes right now just have too many exit ramps for a borrower as they go through in the HELOC piece. So as we kind of jump forward, what has it done for us? So, we've tripled in volume on a month-to-month basis in our originations without changing the product offering. It's literally the same product we were offering 3 years ago. But the product now, because of our risk appetite and because of our understanding of it and because of the technology and workflows we've wrapped around it, we're tripling that. But in the process of tripling the volume, we've also cut our funding days more than 50%. So we're averaging, if we take the middle 80%, which is kind of how we look at it, we average about 9 business days from application to fund. With a lot of these, we're actually signing on the second business day. So we got to wait a little bit to fund, but we're getting these turned around extremely quick, and we're able to do it with less staff touching it, less staff involvement, and run these elevated numbers. We also, what we've seen here is our team that is doing these HELOCs, they are much more aggressive in going and grabbing these HELOC opportunities now and taking these and utilizing these. I'll tell you what gets left behind are these large private party purchase, auto loans. Nobody wants to do those anymore. It's way easier to originate the HELOC and a way simpler process and way more impactful, to our borrowers. So I say all that to say I'll answer any questions from our panel here necessary, but if you're looking at this and you're going, all right, do I need to change? What do I need to do? I would say start fresh. Evaluate the product offering that you've got. Understand your risk tolerance, and then you got to get this application process streamlined. And blatant sales pitch, here I've been the unofficial spokesperson for Coviance for quite some time, but talk to somebody on Alan's team. I promise the process is way easier than you're making it out to be.
I appreciate it, Grant. And yeah, we were at conference together, and somebody was talking to us in the booth, and Grant walks by and is like, "Hey, do whatever they say," or something like that, just goofing. I grabbed you and said, "Hey, careful, or I'm going to rope you into a webinar." And you're like, "Okay," and here we are. So I really thank you for joining and telling your story. It's always fun to hear that journey. And through that journey in conversations with Dawn, I'll just end with this. We've been able to build, and it's through feedback from Grant and his team and others that have gone through this process with us. We've built a whole process that makes this very easy, right? We've got a 4-step process. So it's a home equity health check. And for current customers, potential partners, whoever you are, wherever you're at in our journey with us, it's a great place to start to just get some benchmark data and take a look. As Grant said, it's kind of where they started. Hey, I was taking 28 days and it was a frustrating process. So we can do a deeper dive into the areas that Dawn talked about, that we talked about, that Grant talked about. And it's a great place to just start and say, where are we at? Why are we struggling? And how do we compare kind of to benchmark data from other credit unions that are in the space, right? And then from that, we can lead to some personalized recommendations, some demos, walk through, make sure you understand. And then most importantly, leading to a customized ROI and proposal that really outlines what needs to change, how does it happen, what's that process. And at the end of the day, Grant, I think you can attest to this too. We do a lot of the heavy lifting, implementation into other systems, things that are needed, workflows being pre-built. It's really no tech lift needed on your end to implement any of this, no IT time, no road mapping 3 years for an implementation. We can make this very, very easy on you and your team to implement, and our support is outstanding. Shout out to what we hear all the time, our client success and customer support team for holding hands and making sure everybody's smooth through this journey and transition of adopting new technology. So I'll hand it back to Betsy. I think it looks like we still have a lot of people on the call, which is good. If anybody's interested, I think Don and I, and maybe Grant, if he's able, can stick around for a little bit after the webinar and do some Q&A. I know we didn't necessarily leave time, so we'll probably end the webinar, but we'll stay on for a little bit. If you have some specific questions, feel free to submit those. We can stick around and answer those. Otherwise, Betsy, anything else to wrap up?
Yep. Thank you, Don, Alan, and Grant for sharing your insights today. And thanks to you all for joining us. We will be sending this out via email, the recording of it later this afternoon, so be on the lookout for that. And yep, we do have a few questions. I will go ahead and stop the recording, but we appreciate your time and hope you guys have a great rest of your day.